So, hi, a very good morning to everyone. And thank you, Mr. Amit, for joining us for the interview. So, let me tell my viewers today we have for the interview Mr. Amit Ratanpal, who is a founder and managing director at BLinC Investment Management Private Limited. So, Mr. Amit, let me just give you a brief introduction about Indian Startup Times. And we also have Sandhya Bharti, who is with us as a head of editorial and IPN news. She takes care of that. And so Indian Startup Times, it's been 3 years for us now. And the platform has grown since there when we started. So the vision that we started across was, of course, to interact with the VCs and with founders and to help them to see how this platform can educate and grow and further help the startup founders in bringing their stories through the platform. And of course the conversation that we'll be doing would be helping out the new generation of entrepreneurs through the platform. So in terms of the platform has grown 3 years, 6 lakh impressions monthly basis we are getting. And then we have social media followers now, 38,000 followers, what we have on social media. So of course it's grown. And I think it's all support from the ecosystem that what we have got since when we started, because we never thought of like this, something of this will be able to bring it over here. To start across, I think first we would like to know more about you, your personal journey, and how I think it's been quite a year, like a lot of years for you to be in the investments as a VC. And would like to know about your background. So please, Mr. Amit.
Thank you very much, Ramesh, for having me on the studio. And really, thank you very much, Sandhya, as well. And I really appreciate the initiatives, made by Indian Startup Times, because I think the ecosystem, as you know, has been vibrant, has been growing, and it's now almost like, on a very regular basis, I would say 11 to $15 billion of funding has been receiving year on year. So India is the core of the startup, and it's been, even as we know, has been so supported by the central government, the Modi government, and everyone out here. So it's the great initiatives that Ramesh you have made. So congratulations on this, and a great success to you as well. About my journey, I think a very quick background about myself is I started my life in Calcutta. So I was born in Calcutta, and after my grade 12, I came to Bombay, and this was just by chance, right? I had no plans and nothing. So literally, when I came to Bombay, I didn't know where to stay and what I'm going to do next. So I stayed at my few friends' places, my relative places, and that was my start of my journey of Bombay. And from there I never went back. So it's that's been a what people say, that the place or a city like Bombay just absorb you, and that has really happened for me as well. So I thought of getting into a chartered accountancy. So I became a chartered accountant, and I started my career with Birla Sun Life. So the first 11 years of my life has been in financial services between the Aditya Birla Group owned the Birla Sun Life Group, and then at ICICI Bank. And during these 11 years, I've been very, very lucky to start at least 6 new different businesses, whether as early as e-broking business in 2000, or the depository services in the around that time. And while I was at ICICI Bank, I looked after the offshore asset management business, the fund of fund business, and many more new businesses. So when I looked after different businesses, I really found that entrepreneurship is very, very interesting, because while I was an entrepreneur, but I was working in a large organization. So I thought that, can I do something else, right? And that's where I moved into the private and the venture capital. So I would say last 15 years, I've been sort of being in the venture capital and the private equity space, investing only in two sectors, that is education and financial services. And I've delivered good returns for my LPs and my investors as well. And as we speak, BLinC Fund 3 is what we have launched, and that's what we are raising money for that as well.
Okay, great. I think that's a very good journey that you have been over here. Sandhya, over to you for the questions.
Thank you so much, sir. That's a strong foundation, Mr. Amit, and especially your emphasis on hands-on value creation. So, my question to you is that, was there a specific moment or gap in the ecosystem that pushed you to move from traditional investing to this more engaged model?
Yeah. So I think there are 2, 3 things which really made a difference, and let me share with this with my own examples out there. One was obviously, if you really look at my first 11 years of journey, I love building businesses. So by naturally, the DNA was of building businesses, right? So that's the mindset we came. And we would say that we are more as a business guy rather than an investor. That was one part of it. And when I was with fund of funds, and I met almost all the possible VC private equity funds around 2007, 8, 9, and I interacted with funds like True North, which was India Value Fund at that point of time, which were providing hands-on value. Then I interacted with someone like CVC Ventures, which got converted into 6 partners. Unfortunately, I had we don't have Ajay Rillen now with us, but he was being sort of called as a father of private equity in India. And obviously with Renuka Ramnath, who was supposed to be, the lady who drove the private equity, the venture capital in India. When I interacted with them, I realized that something which really made a difference is when they really had the passion about working with the portfolio companies, adding value through their journeys. And that lot of made a difference. And that combined with what I would love personally of building businesses, right? And that is something which I thought would be the right approach of looking at while making investments and doing it a very hands-on investment approach. That was one part. The other part was that as we make investments, there are companies which go through their own journeys. And Amit Ratanpal, as an individual or any individual or as a founder, would have different expertise and strengths as well. Some would be very good in products, some would be very good in sales and marketing. But when you are a CEO of a company or a co-founder of a particular company, you need probably a 360-degree view. It can be sales, it could be accounts, it could be operation. And that's where I realized that some of these gaps, we can support the founder with our experience and expertise. And that's where we thought a hands-on approach will make a lot of difference for us. To give you a few more examples, when the company is probably a few crores of revenue, you need an accountant. But when the company is at doing about 40, 50 crores of revenue, you need a finance manager. And when the company is doing 100 crore of revenue, you need a finance controller. Now that transition, or how to build an organization, as your business grows, as you grows and mature, I think these are some of the skills which we add value to our portfolio companies. And that's why I thought hands-on approach is where we can make a difference actually.
That's very well explained, Mr. Amit. And building on that, BLinC positions itself as an operation focused investor. So, how does this approach practically play out when you partner with startups, and how is it different from conventional capital providers?
See, from every fund, whether it was Blink 1 or whether it is Blink Fund 2, even Blink Fund 3, we've always focused on investing into few companies, but work very, very closely with our portfolio companies, right? So our typical investment would be that if you have a X amount of funds, we'll invest into 6 to 7 companies so that we can work very, very closely with our portfolio companies. That's the mindset and the approach which we thought we'll have it, while making investments. Now, what happens is that, when we are working with each one of our portfolio companies, and I can give you multiple examples, as early as Marticus Learning, which is a company which are going through an IPO right now. When we invested, the company was just doing 5 crores of revenue. So at that point of time, we had to support the company of building the entire CFO vertical. When I use the word CFO vertical, means the entire finance and accounts team. So what should be the MIs? What should be the frequency? If there are different centers and branches, how should one look at it, right? So these are the approaches which we looked at it. Or we moved to a company in a current portfolio, Fintech, which is into supply chain finance. I think the key requirement of there was they were doing great business, but how to build it now, how to set up processes, how to ensure that now in the balance of compliance and other things, how to move forward on this. So every portfolio company requires different approaches, whether it is sales, it is marketing, whether it's operations. And we, with our understanding, with our advisors, understanding, with the ecosystem understanding, with the network, we will try to provide value and work with each of our portfolio companies on this. In fact, what we have done is that for every portfolio companies, before making investments, we have defined a very clear cut, I would say 30, 60, 90 days plan, which is a short-term plan, and then a long-term plan that what do you want to achieve? And are this aligned together or not? Because whatever we do in the short term needs to be even aligned from a long-term perspective as well. And that is something which we monitor on a very regular basis. In fact, for the first 12 to 18 months post our investments, we always have a face-to-face meeting. We physically go to their offices, spend between a day or two, depending on the needs and requirements of the company, and very closely monitor the 30, 60, 90 days plan. And this plan is, I would say, defined by the founder, work along with us, where we talk about what should be your strategy, what should be your sales metrics, what should be your marketing, what should be operation, what should we do in technology, what are the type of people we to hire, what's your prioritization with that. So we work across the board. It's not only numbers. We believe that numbers is not a merely an outcome of doing various things as a combination, and that's where you get your outcome and the numbers. So this is how we work on this. Obviously, when we are working with all our portfolio companies, there is always the fundamental question comes is that, are we crossing the line? And to be honest, there is no right or wrong answer for that. At times, yes, we may be even stepping on the shoes of the founders, uh, good and bad, depending on the situation. But that is something we are always been mindful of. That end of the day, the founder is going to drive the company. It is their company. It is their, baby. It's just as a helping hand. And that's something, while we like to be as much as hands-on as much as possible, but we also have to step back when, the need of the hour is, or the founder pushes us back, because end of the day, let's be honest, founder is where he's going to make a difference.
It's interesting, and that deeper involvement clearly changes the investor founder dynamic. Talking about the founder quality, like given your vantage point across cycles, how do you see the Indian startup ecosystem evolving in today in terms of founder maturity, governance, and investor expectations?
Sure. See, I think the entire ecosystem is getting matured every year, and with all our learnings, right? Both the investors are also getting matured, as well as the founders are also getting matured, right? And we've seen a phase during the COVID times, between 2000 till, almost 2022, 23, is that the entire sort of, founders, where there was fundraising was very easy. People were getting money as they wanted. People were hiring, tech was a huge demand at 1 crore of salaries, and a lot of news we have heard. And over a period of time, they realized that, what, you can be part of the momentum and you can do certain actions during the momentum, but true value is getting created when you truly look at the business and say, and all businesses has to be revenue, profit, and cash flow. And that fundamental, I think, has sunk in almost the founders and including the investors as well, right? It's not about fundraising, or it's not about the next valuation. It's about that, are you providing the right value added to your customers? Are you building the business which is long term and sustainable? I think that fundamental edits have happened at the founder level. At the same time, I think the Indian startup ecosystem is also getting matured, where the risk appetite of even the investors have gone up. And when I say gone up, means they're ready to invest into new opportunities, new ideas, whether it is deep tech, whether it is AI driven, whether it is education or financial services, where they're ready to take a risk on a new founder, a new entrepreneur. It can be as young as, someone is just fresh from the campus as well, because they believe that the new ideas or the new energy which some of this entrepreneur brings on the table needs to be supported. And I think that is where we have seen a lot of new businesses have got created, whether we talk about Ola, Oyo, or even Zepto, or many of our business. Even in a couple of our portfolio companies, have founders. We are just about a year of experience, 2 years of experience starting a business which they've never done it in the past. But it is the passion. It is about something where they want to create a difference in the ecosystem, like company like Ambisho, who's started the study abroad venture, right? They're very, like, couple of years of hardly experience, but they've got into business because they were passionate about this, and that's how they started as well.
So that
Mr.
shift,
Amit,
yes.
yeah, I have a question for Amit. So, Amit, I just want to know more about, like, of course, so you must have like spoken with a lot of founders, and before investing into any startup. So, what are the things that you see? It's a startup, it's an idea, or it's a founder, and how much time it takes generally before making an investment decision that you go through the process?
To me, I think that's a very, very interesting question, Ramesh. And we have evolved ourselves over the last 15 years. And I think, everyone always tells us that it is the founder first is what we have to look at. It is the founder who can make a difference. And yes, many times we have made, and to be candidly, we have made our own mistakes where we say that, you know, here is a founder, but it needs to be, sort of supported with the right management team. And that's the time where we say, we as being with an operating mindset have worked very closely with the founder as well. But I think over a period of time, what we have really learned out here, Ramesh and Sandhya, is that the founder is going to make a difference. right? And it is extremely important that we align ourselves with the founder and the vision, and equally the founder aligned with the passion with which we are making investments, and we are working very, very hands-on approach as well. And to that effect, what we have seen is that what really ultimately counts is one end is obviously the knowledge of the founder or understanding of the business nuances of a particular subsector in financial services or in education, because that's where we've been making investment. But I think the beyond that is the openness of the founder, flexibility of the founder, the ability of the founder to really understand what the customer is saying, the ability of the founder to really saying that, okay, you know what, I want to let go certain things, but in the larger good, this is going to make a difference. It's not always about me. It's about the passion of creating a business rather than creating a passion about himself or herself. I think these are the some things which is very, very deep. And this is where I would say is where we are really trying to master ourselves and saying that are we backing the founder who is truly passionate about building the business as compared to building something else? And all the characters which I really spoke about, or the characteristics which I spoke about, are more of soft skills rather than hard skills. And that is, I think, which is really making a difference in this today's DNAs, because you can be really, really good in understanding a lot of deep nuances of a sector, but if you don't appreciate as a founder of building the organization, working with people with different likes and dislikes, then it will always be I, the person, right? And that is in my view, is almost like a make or break for a particular founder or a company.
Thank you. Thank you. Moving on to the next question.
So, Mr. Amit, talking about sectoral outlook, like BLinC has a strong focus on education and financial services and fintech. And fintech continues to see rapid innovation. So, where are you most bullish today within these sectors? And like, what kinds of opportunities are still underexplored?
So, so as you would have seen the data, which clearly shows that for last 5 years, and even if we look 10 years, consistently financial services has been between 20 to even at time 28-29% of the overall startup investments which has happened. So it is still the number one sector which attracts a lot of capital. We've seen phases where lending companies, whether it is a NBFC, focusing on loan against property, unsecured loans, or even housing finance company has received a lot of capital. Uh, what we have seen that the gears have now also shifted with 21 crore approximate accounts in the demat side, or about 80 lakh crore been managed by the mutual funds, and the growth of the alternative asset management. We have seen the wealth management space and the asset management space, which was just a few percentage of the overall financial service investment, have grown in the last, I would say, few years to almost constitute between 30 to 40% as compared to lending, which was 60 to 70%, right? So I think the space which is very, very interesting going forward for us as well is the entire wealth and the asset management space. I think as more and more wealth is getting created, as more and more what we've seen tier 2 and tier 3 cities are getting aware that they need to invest into equity or equivalent asset class apart from fixed deposits, because they also need to ensure that the idle capital which is lying is growing more than the inflation. Otherwise, there is a depletion of the capital. We believe that the entire wealth management, asset management is going to grow multifold and maybe 10 times, maybe 20 times from here. And you've seen the trend that at least say, in the last, I would say, at least a month or so, half a dozen of asset management businesses received approval from SEBI, and some of them have already launched it as well. So we're seeing a lot of deepening of this particular sector, both on the wealth and the asset management side happening. So that's one. We believe lending is still a very, very large opportunity, but it will be now focusing on a specific sector or specific region. Like, for example, we've seen southern part of India pretty deep in the lending space. And as we've seen a stability in some of the states like UP, Haryana, Madhya Pradesh, even Orissa to an extent, we've seen that lending businesses are getting created within this space as more micro entrepreneurs or micro SMEs are looking for credit for their next level growth. And so we'll see a similar trend from a regional perspective as well. However, I think collection seems within the lending space a great opportunity, because as the base is getting created large, I think collection will play a very important role, both digital collection as well as different nuances of collection, which is like having a physical collection, or even ensuring that there are legal notice been sent. The entire I would say, value chain of collection is going to become deeper. We believe that insurance sector, which is still about few percentage of penetration across the board, while even with commercial or even the vehicle, while we have seen it's a regulatory requirement that every car owner, every bike owner, every vehicle needs to be insured, still the penetration is 60 to 70%. So we believe the entire insurance sector, whether it is health, whether it is life, or even in terms of the SME general, whether it is fire and other areas of insurance, I think there is a very, very large need for deepening. And we believe that in the next 10 years, what we saw in the asset management business in the last 10 years, or the wealth management business, the way it grow, is going to happen there as well. So these are some of the opportunities within the financial services sector as well. And the same, and if you look at the education sector, again, that's a sector we would like to, where we make investments, we'll see similar opportunities out there. And 6 months back, when we had launched our own report in the education sector, literally, if you really look at early childhood education, about $6 billion size, the capital they've raised is not even touching $500 million. K-12 is a $55 billion sector or $60 billion sector. The capital they've raised is just $1 billion. K-12 support seems to be reasonably funded because that's where you're tutoring, the test preparation. I've got very large funding, specifically where we've seen Byju's and Unacademy, because this is the vertical they focus on. But then we moved to higher education, which is about $20 billion sector. Not even $1 billion got funded, or study abroad, which is $48 billion sector, hardly any funding have been received. So we'll see some of this other areas beyond tutoring, beyond test preparation, a lot of funding getting received. And we've seen some of the large players, which like Blackstone or KKR, making investments in K-12, kindergarten to class 12 sector, a subsector of education as well.
That's great. So could you share a few portfolio companies from BLinC Invest that reflects your thesis in action, and like what makes them stand out in their respective sectors?
Yeah. So as you know, that we've been always a theme or a thesis focus. So what we have done is we've launched our own reports, both in financial services and education, where we clearly define where we would like to make investments. And even post that, we've launched a subsector report, which is a full-fledged report within the financial services and the education sector. So to give you an example, we launched a report on the entire MSME finance. That, hey, what is the value chain of MSME finance, where the opportunities is the opportunity to create brick and mortar opportunities, brick and mortar NBFCs, is the opportunity of providing supply chain finance, is there an opportunity in providing finance at point of sale, and there are different areas to reach out to the MSMEs. And with this thesis, we have gone ahead and invested into Finac, which is a supply chain finance company, or we've gone ahead and invested into BizLoan, which is a secured micro lab company based out of UP and Haryana as well. We moved to the education sector. We came out with our own report in early childhood education, where, as you know, that 0 to 6 years, 95% of the brain development happens. And post launching our report, and almost we went out for a search to say where we should make an investment. We found a company which is raising superstars. In fact, that's the only company in India, and even when we search a world across the globe, we literally didn't found any company which provides education to the parent, that what are the different activities you should perform in different age, as early as 1 month or 2 months of the child as well, where the maximum neurons gets created. And interestingly, that the government has also launched something on early childhood education framework as well. So even the government is supporting this a lot, or a company like Show, which focuses on study abroad as well. So like this, we are very theme basis, and that's where we have invested into some of the companies, as I shared with you, and examples as well.
Yeah.
So that,
So, Amit,
yes, sir.
Amit, I have a one question over here. As you're already, like, I think, investing into education, right? Because the kind trend right now also going. So there are a lot of education startup coming up across, and plus the issue that we are also facing with the use of like screen time for the children, which is there, which is creating a lot of issues. And as a parent also, it's a issue that we face across. So how do you see the education startup coming into it and would be solving these kind of issues? So are you seeing that kind of on a startups also coming across in the education line that would be solving the problem of these ones, educating the parents and other things that are needed?
See, I think the what I've understood, Ramesh, from you is that the fundamental question is screen time or no screen time, right? And we'll ask that question out here. I think fundamentally, let's understand what do you mean by screen time, right? I think the screen time is mainly related to, are you giving screen to your kids watching video games or playing video games? Are you giving kids the screen time to just because you're too busy and not able to spend time and saying that, hey, here is say, something you watch, a cartoon or this? I think these are the fundamental question when you talk about screen time and no screen time, right? Now, obviously, in early childhood education, if you look at between 0 to 6 years, obviously, if you want your children to have maximum brain development, and minimal screen time is what ideally been suggested, because there it's all about creating neurons, it's about your motor skills and a lot of other things, learning, which is a hands-on experience and touch and feel and a lot of other things. But as the kids or the students get mature, I think uh, screen would be there.